Hey, Bulls and Bears, we are back with another dose of economic reality. Coming at you here from the left coast of the USA, also known as California. California from the bankrupt states of the United States of America, also known as the bankrupt states of America. Now, for those of you that tuned into the last episode, you know that the debt now and the interest that we pay on the national debt has basically gone near parabolic, right? So we're in uncharted territory. We've never seen the things that are happening today. We've never seen these things happening. Even going back prior to 2020, we've never seen the debt so high combined with a higher, not a very high, but still a higher interest rate environment. So now even the interest on the national debt, we're lucky to collect enough in tax revenue to even pay off the interest, let alone pay off the principal, which can never be paid down, can never be paid off. So that's why I always refer to us here, not always, but every once in a while, I remind people that we're in the bankrupt states of America. And the world is starting to wake up to this fact. Not so many people here in the United States. I'd say 99.99% of the people here have no idea that anything strange or unusual or dangerous is happening. I think this is dangerous, especially the fact that so few people are prepared. But if you look around the globe, a lot of countries are moving out of the dollar, moving away from the dollar. So we're going to see big changes here happening globally, but also just in the United States with this economic downturn. Because on top of just the national debt that we see just spiraling out of control, deficits like we've never seen before. We've got consumers and just normal households now just buried under enormous amounts of debt. And we continue to see sign after sign after sign that this economy is at the beginning of a collapse. This is a slow motion collapse, but it's beginning to appear more of a fast motion collapse. More layoffs are announced today. Take a look at some headlines here. And the layoff announcements just keep coming out nearly every day. And they're not just a small few hundred people. These are sizable layoffs. Here's the latest, one of the latest anyways. Dell to lay off over 6,600 people. That's 5% of its workforce. But apparently we're supposed to believe that everything's fine with the economy because the jobs added number in January was higher than expected. And the unemployment rate is at historic lows. But yet we're not going to count the people that are no longer eligible for unemployment as being unemployed. So you see how this works? So this is just manipulation. The calculations for these numbers, the unemployment, the jobs added, are highly misleading. See our 2 or 3 reports ago where we broke down how the jobs added numbers completely phony. But if things were so good, if the unemployment number really meant something, if the jobs added number really meant something, why are these companies laying off? So maybe somebody should call Dell and say, hey, don't lay these people off because the unemployment rate's this and the jobs added number was this. From January, I say, what are you doing laying people off? And they're going to laugh at you and hang up on you because they see reality. They see the plummeting demand for PCs in this headline right here out of The Verge. Dell to lay off 6,650 employees as demand for PCs plummet. And we see this across the board. Consumers are pulling back on certain types of spending, and that's for many different reasons because of the cost of living. So every dollar that goes into someone's fuel tank is going to be one less dollar they'll have to spend on other things, including electronics here. And that's becoming more and more apparent every day that we see these layoffs come out. Right? We're yet to see the big fallout, though. I think we're still in the early stages. The housing market, with sales basically falling off of a cliff, that's going to have an enormous economic impact here on jobs, the labor market, on incomes, and it's going to be combined with the rising rate environment on top of record amounts of debt that most people are carrying now, combined with all these job losses. The governments are going to have to try to raise taxes to try to make up for the lower revenue with home prices falling and with shopping falling and less sales tax. So overall, this is going to be a very, very challenging environment for most people. I don't think we're going to get out of 2023 without some some major things happening. Now, if you look over the past few years, major things have already happened. And, I think we have to be really, really careful this year um, as humans, as people that do not want to suffer the consequences of this deteriorating economy. So I would be very cautious about diving into major financial ventures right now. I wouldn't want to be buying a home right now. And I wouldn't even want to be buying a vehicle right now because I think we're going to see major corrections in those areas. Now, anything can happen. They could bring on more 2020 type of price controls and assistance programs, prevention programs. Look at what happened in the housing market with rents. We're talking about what's going to be implemented now. It's looking like it's nationwide rent control because so many people can't afford their rent anymore. And there was a meme, and I might have shared this yesterday. Let me just bring it up real quick here. And sometimes you get an image that really paints the picture, it tells the story of what's happening very well in just a short image here. This guy says to this girl here, the economy is going great. We created 5 million jobs this year. The lady there with the Walmart shirt on also has a McDonald's hat and an Uber Eats hat. She says, I have 3 of them and I still can't pay my rent, folks. That sums it up pretty well. That's what's happening. A lot of these jobs added are part-time jobs, low income jobs. People have to work multiple jobs. And the more multiple jobs people get, that looks better on the jobs number. So it's a complete scam, folks. And I don't think anyone here is, not aware of this by now, but there are some new people. So I kind of have to revisit things. And for those of you that do tune into every episode, I apologize. I have to repeat these things, but I still see people down in the comments. I still get emails questioning me why I'm talking about the economy not being good when all these other numbers that they're showing us, look to be great. Look at this 50-year unemployment number. There's people out there that still don't know how it's calculated. They don't know that if you don't qualify for unemployment, you're no longer considered unemployed as far as their statistics go. So please share these videos if you can. Talk to people about this. Bring up the discussion. I talk to people about the economy all the time. I'll be in the line at the grocery store, and within 2 to 3 minutes, I'm talking about the Fed funds rate, the debt, and just things that you wouldn't expect to be talking about to a total stranger within just a few minutes. But that's just where my mind goes, probably because I'm doing this, researching this stuff every day for you guys. And it's just a lot of phony, a lot of misinformation, scams out there trying to portray what's going on right now with the economy as somehow being good. But again, we have to look at the things that are happening right now. We've never seen this type of the interest paid on the national debt just going parabolic like it is. So I think we're at, I think we're very close. I think we're very close to something happening. We've got the de-dollarization happening. Something's happening behind the scenes with gold and silver. We've got the national debt clock was showing 0 for the gold to silver ratio and also the dollar to oil ratio. Now, when this first happened, I didn't think much of it. I got a few messages about this, a few emails. If you look to the right here, dollar to oil ratio 0 per barrel. Dollar to silver ratio 0 per ounce. Dollar to gold ratio 0 per ounce. So at first I was like, okay, it's just a glitch. They're gonna probably fix it later on today. Now, if I'm not mistaken, it's been over a week, and these are still set at 0. So is something happening behind the scenes? If it's just a glitch, why in just these 3 categories that are related to the dollar versus commodities, why is it just those categories that are glitching? Does it have something to do with the global de-dollarization? We see all these other countries now trading amongst each other, trading outside of the dollar, reintegrating commodities into their trades, re-implementing precious metals and specifically gold, using the blockchain to come up with a gold-backed trading exchange. Very interesting things that are going on right now. Again, things that we've never seen before. So I think there is a connection here. It's been so long now. Please let me know what you think down in comments. Are we seeing these ratios zeroed out for a reason? Are we on the precipice of some sort of a massive restructuring of the global financial system, which is going to be very, very bad for the dollar? But this debt clock just has so many different data points here. Let's just look at one of these here. This is official unemployed, 5.6 million. actual unemployed, 10 million, so almost double. So right here, it gives you a pretty good idea, but that's just the tip of the iceberg. If you look at not in the labor force, we're nearly at 100 million people, right? So did the clock just strike zero for the US dollar? We'll have to see, but I hope you are all prepared for what's going to be coming at us here this year in 2023. I can't see us getting out of this year without this economic collapse being noticeable to most people. Another thing is the stock market. The stock market remains completely detached from what's happening on Main Street. And the way that a lot of people explain that is that Main Street is disconnected from Wall Street, right? Two completely separate worlds, right? So people that are looking at the stock market to gauge how the economy is actually doing, well, it's pretty good for the Wall Street bankers. But for most people, for most regular people, there was a survey that just came out a few weeks ago where most people already feel like and already believe we're in a recession. But of course, that's not officially been declared by the powers that be. But if you just ask people how they're doing personally, financially, their personal finances, not so good. It was about half of the people that were surveyed said we're already in a recession, and they're just looking at their own personal stuff there, their own financial situation, right? And with about 70% of the economy being dependent on consumer spending, that's another thing that's going to tell us, we're in some deep financial troubles here as a country. So the bankrupt states of America is going to continue to look a lot different and transform here as we go further into the year here, 2023. And as I'm recording this today, just before market closing here on Monday, February 6th, 2023, we've got all major indexes in the red. So is this going to be the beginning of the end? The stock market actually hasn't reached those all-time highs that we saw at the end of 2021 going into 2022. So here we are a year later. We still haven't went back to new all-time highs in the stock market. So I think the top is still in. There's still a lot of manipulation happening, a lot of shenanigans, a lot of stock buybacks happening out there. A lot of the big hedge funds, a lot of the big financial institutions, trading firms, including the big mega banks, are doing massive short squeeze against retail traders who are trying to bet against the market or who are trying to short the market and win to the downside. So short squeeze, corporate buybacks, temporary bump in the stock market, but still haven't retraced those highs. So we're still, the top is already in for the stock market, in my opinion. Please let me know, though, what you think about this parabolic debt, about the zero on the those different categories as far as the dollar is concerned, on the debt clock, the layoffs that continue, the phony jobs number, the unemployment number, all of it. Please let me know down in the comments. What are you doing? How are you doing? And what are you doing to prepare? Hope you're doing well. So we're going to stay on top of this for you. Please come back for more financial economic news so we can be ahead of the curve and actually come out on the other side looking shiny like gold and silver. Thanks everybody for watching. Big love. Keep stacking and peace.